point is that the way in which data got revised lower in the US, the feeling now is that the QE timetable, if anything, could be pushed back. So that's given the market a spring in the step across emerging markets, across risk assets. So how does that change our look on the Nifty itself? From a technical angle, Gaurav Mehta of Ambit Capital joins us. Gaurav, what have you made of the manner in which the Nifty cracked and the way in which it found support? Do you think some long-term support levels have gotten breached and we are at risk of falling? We continue to be at risk of falling? I think Gaurav is not able to hear us.
Yeah, I couldn't hear you properly, but...
Okay, I just wanted to know if the recent fall has breached some of your strong support levels. So do you think the Nifty is at risk of falling further?
No, I would not think so. So, broadly speaking, we are at very important long-term support levels. And, it's easy to sort of get bogged down by the day-to-day negatives that you see these days on the indices. But, if you were to zoom out a little and look at the Nifty from a very long-term perspective, then you would see that the long-term trends that we started in, somewhere around 2003, those long-term trends haven't still been declined. They haven't still been breached. They haven't still been broken. So, by a long-term trend, what I mean is that around 950 on the Nifty in 2003, we started this superbly uptrending long-term trend line. And post that, we've seen all sorts of negatives, right from the financial crisis in 2008-9. After that, all sorts of policy paralysis, corruption scandals, corporate governance issues, growth slowdown, inflation remaining high, and obviously the twin deficits, and now most recently this entire QE fear. But in spite of that, those long-term support levels haven't been breached. We are just about that 5650 mark, which on a weekly basis is an important level to watch out for. And if we do sustain anywhere close to this 5650 mark, then our base view remains that we should see a move towards 6350 levels very soon. And given that these are very long-term levels, you should always be ready to give and take a few points here and there. I think the consolidation pattern itself is very mature now, and hence a move out of this pattern sometime very soon looks very likely. And we would think that sometime later in this calendar year when you should make an attempt to break the previous high 6350 odd and do that successfully.
We expect 6350 to be broken in the current year, Gaurav, in 2013?
Yeah, we would expect it to be broken in the current calendar year in 2013.
So Gaurav, would you recommend buying any stocks at current levels, since we are already sitting at long-term support levels? And if yes, which ones in the large cap space would catch your attention?
Right, first of all, looking at the entire global dynamic, which is, the US is now recovering, US bond yields have started rising higher. So which is why, the global investor will now be more inclined, given the fact that US yields are now higher, the global investor will be more inclined to buy stocks which are, better yielding in terms of their earning yields. So far the trade has been to buy whatever stock that you can, irrespective of the earning yields, as far as there is safety. But a lot of these expensive defensives now, because they are lower earning yield stocks, given that their PEs are so high. So I think the trade would now shift towards stocks that are relatively high in terms of earnings yields, which would mean buying stocks which are relatively lower in terms of their valuation multiples. So we would be inclined to buy value stocks. We would be inclined to buy cyclical stocks at this point in time. From the large cap universe, from a timing perspective, 3 stocks that look ideal at this point to be bought into are Larsen & Toubro, Tata Motors and ICICI Bank. Most of these stocks, all 3 of these stocks in fact are very close to their long-term support levels. And in the event of Nifty moving to 6350, which is according to us a high likelihood event, you should easily see about 20-25% kind of an up move, even in that up move till 6350.
Okay. An attractive asset class these days, of course, is gold. Is it, would you say it's in a bear market, or do you think it's close to the end of its lower down correction and might stabilize at these levels? What's the chart of gold telling you in terms of levels?
So gold, ever since it broke below that 1530 level in terms of its dollar pricing, I mean, it's been in a bear market. It cleared that 20% threshold then, and after that it's already fallen by another 20%. So gold in that sense, I mean, to us clearly looks like to be in a bear market. Whether the downside is already over or whether there's more downside is a secondary question. I think what's of primary importance is the fact that if you buy it as an asset class now, I think over the next several years there is very limited likelihood of you making any meaningful sum of money. So you know, we might either go in for a choppy trade or we might trend lower. But the point is that given that it's in a bear market, you won't want to play it on the upside at all.
Gaurav, just coming back to your view on the Nifty, what will give you the conviction that the Nifty is going to be defending that 5650 mark, that long-term support level, because we're precariously close to that. Anytime perhaps we could breach it on the downside. So what will give you the conviction? Maybe a 100-point up move on the Nifty, and then you perhaps will believe that that support level is holding and the Nifty is on its way to that 6350 level, and will give the investors conviction to buy.
I mean, first of all, talking specifically about the Nifty, the closer we close to that 5650 mark on a weekly basis, tomorrow obviously being the weekly close, the more likelihood it is that we are maintaining that level. But that aside, even if you look at the total positioning in the markets currently, I mean, derivatives are very, very pessimistically positioned. You look at US markets, they are very close to their, the important support levels, which were the 2007 highs of about 1550, 1560 on the S&P. And combine that with the fact that, so far we've seen very weak rollovers, which in some sense gives an indication that the short guys aren't really very convinced about carrying their positions over. I think all of that in totality gives us a good deal of confidence that that this 5650 mark will be respected, and we surely are not in the camp that believes that this recent surge in US bond yields is a negative that can negate such a major trend. Given that history suggests that periods of rising US bond yields have in fact been the periods of best equity returns in India. There have also been periods of the best economic growth in India.
Okay. Well, very quickly, your view on crude. Do you see it sustaining above the 105, going all the way to $110? What's the range for 2013?
Right. I mean, first of all, instead of talking about Brent crude, if I could just shift the focus to WTI crude, which I think is around at 95 odd levels currently. If it moves anything beyond 97, 98 on the way up, I think that poses a real risk of it then giving another 15-20% kind of a rally, and obviously WTI crude does that. Brent should not be any exception. Although, I mean, what's heartening is the fact that that premium of Brent over WTI crude has narrowed quite significantly. But again, I mean, if WTI does manage to breach 97, 98 on the way up, I think that will be a negative for equities, given that crude rise obviously is not good for India. But again, I mean, given what's happening in China, given in general, don't think that is a very high likely event.
All right, Gaurav, we'll leave it at that. Thanks so much for joining us.